Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I am here as ever with the wonderful Francis and Tom. How are you guys doing this week?
Very, very well. I feel like we've had a good couple of podcasts recently. We've been enjoying getting stuck in. I feel like it's really energized us for the ones coming up as well. So I'm excited for what we've got in store today.
We've definitely been getting very pleased with ourselves about the quality of podcasts we're putting out. So
it might just be arrogance at this point, but
it could be. And how far will we fall when someone listens to it and says, "Actually, it was all right"? Francis, how are you doing today?
I'm very well, very excited about the conversations that we're going to have today. Hopefully, they live up to our standards of what we've now set as our standard, even. So, yeah, it should be quite good.
Awesome. Love that for us. Hopefully we can live up to those standards. But what are you guys going to be talking about today, Francis?
So today I'm going to sort of be carrying on the conversation from last week about buy now, pay later and whether the hype has died down or not.
Awesome. And Tom, how about you?
This week I'm going to be talking about a new initiative which is looking to democratize access to digital banking in the Brazilian favelas.
Fantastic. And I'm going to be looking how high interest rates can negatively impact female business owners. So three really interesting, very different pieces today. Francis, I'm going to pick on you to go first because I'm quite intrigued to carry on the conversation we had last week because I thought it was really good. So let's really start high on this one.
Yeah, sounds good. I mean, last week we really were sort of discussing the myths surrounding buy now, pay later and if they'd really been busted or if they were still a thing that people were struggling with, like debt and so on, and the need for financial education. And I kind of wanted to continue in that vein a little bit. I mean, we've at the Fintech Times, we've been looking at buy now, pay later as part of our monthly focus. But one of the articles that we did recently was on the technology's use and if it would ever surpass credit cards. And of course, credit cards are almost a bit of bread and butter of what you think about in finance, really. You've got your debit cards and then there's the looming dangerous credit cards, right? And when you sort of put it like that and how risky they can be to use, it does make sense that buy now, pay later, as we sort of discussed last week, does fall into that same category. But I really wanted to talk about it today because when we talk about hot topics, I remember when we spoke about NFTs a few years ago and so on, there's always a feeling that is this a hot topic that's going to sort of stick, or is it just going to be something that we forget about in a while? And that was kind of what we asked the industry as well. We said, has the BNPL hype died down ever since the pandemic, or is it here to stay, really? And from the article that I put together, it was very much a resounding BNPL is definitely not a dying trend. And yeah, I thought it was a really interesting sort of topic, especially around, I thought it was kind of combining those two. Like, is it about hype and how close is it to ever overtaking credit cards and sort of becoming the de facto credit payment platform, I suppose. And I think when you talk about, because what everyone seemed to agree in that article was that BNPL is never going to overtake credit cards because of the incumbent usage that people have sort of grown up with credit cards per se. Whereas buy now, pay later is this new technology that's emerged in the last sort of 5 years or so. People were very sort of cautious about saying that, it could overtake it. However, there were a few experts that seemed to suggest with the right momentum propelling buy now, pay later forward, it could eventually surpass credit cards. And of course, to have that momentum, it needs hype. If the hype dies away at any point, I think we could all agree that it's the end of the line for BNPL. So I think the main thing that I wanted to discuss with you guys, which was something that was brought up in this article about hype, is financial education is a huge part of ensuring that people know how to use these services properly. And if they do know how to use them properly, they're likely to use them again, spread the word, and so on and so forth. So what I wanted to ask you guys really was, how important is financial education in ensuring hype? And is there anything more important, like greater regulation or anything like that, really, sort of expansion, things in that vein? Is there anything else really, in your views, that you think outdoes education? Because for me, I think financial education would probably be the most important one. I feel like once consumers know how to use a product, that is when sort of regulations could probably, well, if they do need to be introduced, that's when they can be, because at that point consumers have sort of established how they want to use it, and if they know how to use it, they're not going to be falling trapped and in need of regulation to sort of save them. So in my opinion, education is number one, but I wanted to see what you guys think. Tom, I'll go to you first.
I think when we're thinking about the BNPL space, especially, I feel like regulation might be even more important, especially at this stage, just for the fact that BNPL in itself is quite a simple concept, and a lot of people would assume, at least, that they know how it works. They understand what the deal is when they use BNPL to pay for something. They understand that there should be late fees in some cases, or there's going to be a certain amount of interest that's told to them beforehand. And I think people have this because it's quite a simple concept. It's a way people just think, okay, I know how this works. I'm happy to use it. So in that case, I think that's where regulation really needs to step in and ensure, especially transparency, and that we don't have any more like hidden fees that are kind of hidden away in the terms and conditions. There's Everything's very upfront. They explain to you in the simplest possible terms how much you're going to be paying back if you pay on time, if you're going to be paying however late, and make it as obvious as possible for people to understand. And I guess regulation can help financial education in that respect by ensuring that all BNPL firms offer the resources for people to educate themselves about that product. So I think right now, I feel like regulation might be even more important than just generic financial education, although they kind of come hand in hand in making sure that consumers are protecting themselves first and foremost when they're using them. So I think for me, regulation has to happen. A lot of firms have already kind of taken the initiative and they are completely transparent, but there are obviously the odd few that are trying to sort of maximize their capital with these kind of hidden fees. So I think in that case, that's where the regulators need to step in and make sure that even the most educated financial users aren't being tricked by basically firms that aren't being transparent.
Yeah, definitely. And I see where you're coming from. And I think you guys might agree or disagree, but it very much feels like what should come first, the chicken or the egg, when it comes to regulation or education. Do you say consumers need to educate themselves on what's going on right now, or do you want to regulate it first and then have the consumers educate themselves surrounding those regulations? The only reason that I would say education is more important is because regulation is always going to be evolving. I think that's something that we've discussed on the podcast before, and that's the idea of you're never going to get to a point where you can sort of say full stop on regulations. That's it. That's all we need to do. They're a constantly evolving process. And in my opinion, if you're prioritizing, or not that if you're prioritizing them, because you should be from a merchant's point of view, but from like a consumer's point of view, you should educate yourself on what's actually happening right now. But that's just my opinion. Polly, what do you think?
Yeah, I agree with kind of what both of you have said. I agree with Tom in that I think regulation is an important next step. I think just because we're still waiting for something after, all these years. Like, this is a conversation about buy now, pay later that we've been having since like 2020, if not earlier. You know what I mean? We've been having kind of the very similar conversations throughout the industry for the past 4 years. Which goes to show kind of how relevant it still is if we're still having these conversations. And I think regulation is important to get something in there because, as you know, since we still don't have anything sort of concrete, there's still nothing firm on any sort of regulation or anything like that. I think it's important to get that in. But then I do agree with you, Francis, as well, in terms of financial education and that being important and for consumers to know what it is that they're getting themselves into. But I do think I have a few things to say, actually. The first is when it comes to financial education, I think, obviously we are big supporters of financial education on this podcast and we talk about it a lot. But at the same time, I think at some point we need to start considering how this education is going to be delivered. Because I think it's all well and good saying we need to have financial education. People need to understand about these financial products and how to use them. But I think someone needs to sit down. I'm not saying it's us because what's it to do with us, but someone needs to sit down and actually think about how we're going to deliver this education. Because I think if in the comparison of buy now pay later to credit cards and stuff like that, no one ever taught me how to use a credit card. In fact, the lesson that I learned about credit cards from my parents was don't get a credit card, even though actually there's a lot of good things that a credit card can be useful for, like building up your credit score, having that emergency fund. But like my education was very much do not get a credit card. And that was it. So actually, I think we need to start thinking about, like, do we need to get it in schools and then do programs like that a lot of companies are kind of looking into? Is it a case of the actual product, brand, service, whatever itself needs to educate you? So like as you're applying, does like something need to flash up? But then, we all see the terms and conditions flash up that we're all supposed to read and agree to, and none of us ever do. So it's one of those things where we actually have to start thinking about how we're going to do this, because I think it's super important, and it's something that is absolutely necessary for consumers and everyone really to be able to like use these financial products best and like negate as much risk as is humanly possible. But we need to figure out how we're going to make people learn, because that's not always easy. And the second thing I wanted to add really, really quickly was just about this idea of like the hype train and everyone being like, oh, the hype isn't over. I think that's what we were in the original article. It was very much the hype isn't over. And I think people are always really afraid of hype going away, and I don't think actually we need to be afraid of hype going away. And I'm not suggesting that the hype of buy now pay later has died down, because obviously it's still kicking and it's still going, but it's not as talked about and it's not as crazy as it was a couple of years ago. But I don't think that's a bad thing. Having the hype die down isn't a bad thing, because then that makes it normal. It just makes it in every part of everyday life. Obviously, you don't want the hype to go away so much so that interest is now zero and like no one's using it, no one's paying for it, blah, 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 blah. But in the same breath, I think having hype go away and just it become a regular product, a regular service that everyone uses, everyone knows it's there, everyone's aware of it, everyone's using it, and people are still using it. I don't think that's a bad thing, because I think that in any way that's going to make it a lot better for consumers, because it just becomes normal. It just becomes something that is there, that can be used. It's an alternative payment method that is there. It's ready to go. And it's just standard. It's not like this huge, big buzz trending thing that you have to use and you have to try because it's buy now, pay later and everyone's talking about it. Actually, it's just becomes a payment method, and it becomes an alternative payment method, just like card did. And I think that is kind of what you want, and that's what's key. You want it to be just an everyday thing. And I think that's what it's becoming. And that's not a bad thing. If anything, that's a good thing, because I think it means that it becomes a lot more accessible to everyone, because suddenly everyone knows about it. I think that's going to help the financial education, because it becomes less of this big scary thing that everyone's talking about, and it's just a regular facet that you see. Like, I think pretty much every checkout now on the internet, there is some sort of buy now, pay later option, whether it's Klarna, ClearPay, PayPal, Pay in 3, whatever it is. There's always some sort of pay in 3, pay in 4, pay in however many option. So, and I think that's good, because I think that in the end of the day, that's going to do more for buy now, pay later than anything else will, because it just makes it a standard thing. And then I think that makes it more normal, and people are going to be more inclined to look into it and try it, but try it responsibly, because it's just a payment method at the end of the day, and that's all it is. So that's my 2 cents. I've talked a little bit too long about this. Back to you.
Yeah, I definitely think there's a lot of merit in what you've just said there, in the sense of that once it's a normal day-to-day type of thing, people might not be reckless with it as much. They might actually look into it, because it's not a breaking news thing. It's not where they're like, oh, I've got to try this out and I'm not going to really look into it. It almost becomes a niche product, in that people use it when they need it, and if they need it, they'll most likely be looking into it a little bit more. So no, I definitely think it's been a pretty good discussion, and I'm sure this won't be the last time we talk about BNPL by any stretch, but it definitely adds to the conversation, which is always good. But Polly, why don't we go to you next?
Yeah, so mine is all about how high interest rates are negatively impacting 74% of female business owners in the UK. So, a new survey from Tide, the Female Business Owners UK Index, which examines the challenges that women in the UK face when launching and expanding their businesses, has found that with high interest rates, 38% of female business owners have put growth plans on ice, and 74% explain that these high interest rates have negatively impacted their business during the last 6 months. And of these, 40% struggle to plan for the long term alongside current macroeconomic conditions. So obviously this is something that I think isn't necessarily news. This is all, obviously there's news, but this isn't new. We've all heard this before, obviously, in both facets. One being that high interest rates and the current economic climate are making things very difficult for businesses, particularly small businesses, to operate. And this is obviously like across the sector. It's not necessarily limited to fintech. Obviously, this is everyone's struggling a little bit at the moment, which is not fabulous. But then also, I think this isn't brand new information when it comes to sort of the struggles of female founders, that female-led businesses often have a lot more challenges to them than perhaps some of their male counterparts or other counterparts. And with female-led businesses are 20% of all new businesses in the UK, and only 5.6% of all women in the UK run their own business, which I thought was a very interesting statistic. And I think having these high interest rates just adds additional barriers to female founders and female CEOs and everything like that, that makes things really difficult to actually break into business. Like, there's a lot of other different facets that make things difficult for female founders. Particularly when we're thinking about sort of funding, that's obviously that has historically been quite difficult for female founders to get funding, like VC funding. But there's also other sort of personal issues, like, childcare and getting back into the workforce after having a baby, like general like stereotypical maternal roles can also be quite difficult as well. And I thought it would just be really interesting to discuss this on the podcast and think maybe not necessarily how we can fix it, but what it is that we can do to try and sort of promote female founders and try and get over this barrier. Or is it just a case of you've kind of just got to ride it out, especially with these like high interest rates and the economy being rubbish for everyone? Are we just going to have to see female founders ride it out and hopefully find the light at the tunnel and be there still at the end? Or, what's kind of the deal here? What can we do to try and make things better and support female founders in fintech in the UK? Francis, I will go to you first.
Like you said, I don't know if I have an answer necessarily in sort of a solution per se, but I definitely think the UK or founders in the UK and just investors in the UK really need to take a note out of the America's side, should we say, because in the article it says that only 5.6% of women in the UK run their own businesses, which is much lower than Canada, which is 3 times the amount, 15%, and the US, which is 11%, so twice the amount. And I mean, even then, those don't seem like very big numbers. It's definitely not where it should be. But even 50, if you were to say 1 in 10 businesses are owned by a woman, then you'd be like, that isn't enough, there should be more. But then when you think to the fact that that's even less than that in the UK, I think it really draws out sort of where the UK is lacking. And I definitely think that if you're looking to improve, you've got to sort of go to or almost take notes from areas that are seeing more success and try and emulate that. Really, I think the sort of the economic period that we're in right now is making funding very hard for everyone. I don't think it's only women that are suffering from that. I think it really is everyone. It's difficult to say, really. I'd like to say that, this is the one solution that needs to be done, and then that will solve the problem, and even in a tough economic climate. But I think it is unfortunately going to be a case of taking note from more prosperous regions for when the economy recovers, that then the UK can, or the female founders in the UK can really sort of succeed after that. And then when there's more money to be had, they can really sort of show why they should be having it. And I think that will be the case, because I mean, there's a ton of great businesses that are run by women, and I think that they are inspiring the next generation as well. And especially as we sort of emerge from the difficult economic climate, I think we will hope, well, I should hope that we would see that. But yeah, unfortunately, I think for the time being, it's more of a take note for the future type of stage that we're in, which is a shame. But I think unless you guys have other solutions, but there's not any that I can think of immediately.
Yeah, no, I think you're absolutely right. And it's one of those really difficult situations where obviously I think we can all crowd around and say we need to do something, but what that something is, it's quite difficult to say. And I know there's a lot of support out there for female funders, which I think is absolutely fantastic. Female funders, there's a lot of support out there for female founders, which I think is fantastic. There's a lot of accelerators that are dedicated to female founded businesses. There's a lot of different sort of communities and support programs and everything like that to support women in these businesses. But it's just one of the things where it's like, well, if the economy is already rubbish, then it's going to be really difficult, even more so, to get kind of funding and other business loans that you might need. But Tom, what do you think about this? What do you think about solving the female founder problem?
Yeah, I think you've both hit the nail on the head in the sense of there isn't a perfect solution. There's not something that you can introduce or an idea that you can bring in that's going to drastically change the numbers. But I think, something we see so often is different reports coming in, whether it be reports about how female-led businesses find it harder to access finance and access loans and things like that when compared to male businesses, despite the fact that the stats for female-led businesses are often better. I think it's a societal problem that extends far beyond the UK, but globally, realistically, in the sense of a lot of the way finance is run is just inherently against female founders and female-led businesses and things like that. And I think that's something that has to change. But obviously, it's going to take a very long time to kind of change the system, as it were, to make it a level playing field. Obviously, in the UK as well, like you were mentioning, we've had these tough conditions that haven't made it any easier, and that's just adding to the issues for a playing field that isn't level at the moment, and making it even tougher for female-led businesses. So it's obviously a very difficult time, and obviously that doesn't inspire people to found their own business. They realize the very obvious barriers that there are for women, and then paired with these kind of interest rates, it doesn't seem like a great time for anyone, let alone females, to found their own business, start something up, however great an idea it might be. And I think that's a difficult problem that has to be kind of solved, first of all, I guess, economically, and second of all, by really tackling these issues head on. And like I said, there's so many great initiatives and programs that exist that are trying to close the gap. But I think in order for it to fully close and for us to have this sort of equality and equity, is these sort of deeper societal issues do have to be tackled. And obviously that's an issue that I'm not sure anyone has a solution for, otherwise they'd be engaging with it already.
Yeah, I think you're absolutely right. And I think you both hit the nail on the head there. It's one of those really frustrating situations where there's not a lot that can be done sort of short term, but hopefully over the long term, as we kind of like chip away at things and more programs come out and like more people are trying it and we have more role models and all the rest, that hopefully it does start to get better. So I think we can hope for a brighter future for female founders for sure. But anyway, let's move on to your story, Tom, and take it away.
Absolutely. So, as I said, this article is about a new initiative which is hoping to democratize access to digital banking, particularly amongst the favelas in Brazil. So, DOC, which is a payment and digital banking enabler in Latin America, is supporting a new digital bank actually born within the favela called G10. And it's essentially offering its technology to help invest in entrepreneurial power and encourage online banking for residents of the Paraisópolis community in Sao Paulo by introducing a new physical G10 Bank branch in that region. So ultimately, this partnership is hoping to democratize access to finance across these communities, which historically have been overlooked. And the new physical bank branch is being introduced to complement G10's digital banking offering, which is powered by DOC. And I thought this story was just a really good example of one of the areas that we do love about fintech, which is increasing access to finance and boosting financial inclusion and support for those that need it the most. And one of the main purposes of the project is to ensure that all the investments made into it return to the community. And around 50% of the residents there operate their own business already, according to data Favela. And Antonio Suarez, who's the CEO of DOC, explained that its goal is to put the community's money into circulation and generate value there, and hopefully generate better outcomes for the people in these favelas. And the partnership hopefully is going to provide credit as well. So a G10 Bank pilot project, which was previously carried out non-digitally, benefited around 200 entrepreneurs with microcredits totaling 1 million Brazilian real, which is equivalent to around $200,000. And Gilson Rodriguez, who's the CEO of G10 Bank, explains that the initiative has made it possible to increase people in the area's income and stimulate the creation of jobs in these favelas, and therefore contribute to the financial education of entrepreneurs there. He also explained that G10 expects to open 4 more physical branches in the first half of 2024 across various favelas in Brazil. And really, I just thought this was a great example of improving financial access for the people that need it the most. And yet often, historically, we've seen that these are the people that are actually the least likely to receive support and help, because often firms, don't really see a commercial benefit to supporting people in these poorest areas, whether that be in Brazil or anywhere else across the globe. And really, I just wanted to get your guys' take on these kind of initiatives and what you think about, this specifically, and how fintech can support, the poorest people in society, not just in Brazil, but anywhere in the world. Polly, I'll come to you first.
Yeah, I think, like you said, this is just a really great example of the good that fintech can do. Like, they have identified a gap here in LATAM and are aiming to solve it, and I think that's really great. And I think there's hard to find a bad thing to say about it. Though I'm struggling to find a bad thing to say about it, because I think, even just having the support there ready to like boost the society and help with the financial system in the area and help people learn how to utilize online banking, but then also the fact that they're opening physical branches. Obviously, I think, was it last week or the week before, we were talking about how more branches are closing in the UK, and yet here we have, I know in a different country entirely, but here we have a business opening more branches than just the one, which I think is absolutely fantastic. And what a great way to support a community and to help really boost both the financial education of the people that use their system, but also just in generally like really help stimulate the community around it and the financial system around it. And I think what I also really like about this is how they're ensuring that the investments of the project return back into the community. And I think that in itself is just fantastic. Like, to take, the community money, through these services, and then put it back into the community to really just like generate more value and keep going and going and going, I think is just brilliant. So yeah, I mean, I love things like this, because I think when we talk about fintech for good, obviously when we do like our special sort of months, and as well just in general, I think this is a really great example of the good that fintech can do. It's about not only just providing the services and the products that people need, but actually making a difference, and a difference in a way that I think fintech is really uniquely situated to make. And I think, obviously with here, and empowering the residents of this community and really helping to encourage online banking and just really supporting them in finances, I think is just absolutely brilliant. So yeah, I mean, I don't really have a bad word to say. I'm sure Mr. Devil's Advocate over there might think of something, but yeah, I love it. I think this is exactly what we think of when we say fintech doing good, and I wish we saw more of this, and I think we will. And I think that's the good thing about fintech, is that this is the kind of thing it can do, and we keep seeing new things all the time. So it's really great to see.
Yeah, it's fantastic, and like you said, it's a great example of the space just providing good. There isn't really anything bad you can pick out to say about it. In every aspect, they seem to be doing good. Even the sense of they're introducing branches to complement the online offering, so ensuring that people are financially educated about the possibilities of online banking for those who wouldn't necessarily have had the opportunity to get engaged with online banking before. So, in every respect, it's a positive step forward for people in those communities. And I think, like they said, it's bound to have a great financial impact on the people within those communities, and really just ensure that people are getting the best outcomes that they physically can. And that's the good, as you said, that fintech can do. But obviously, we've got our very own LATAM correspondent over here, and I'm keen to see what you've got to say about it.
Well, when you guys build it up like that, Mr. Devil's Advocate, saying, the LATAM correspondent, makes you think I should say something a bit outlandish that perhaps hasn't been said yet. But unfortunately, I think I'm going to disappoint on this occasion, because I think you guys have really hit the nail on the head. And there isn't really anything else that I can add. I made some notes before the podcast on what we were going to talk about. And I think, Polly, you've actually said exactly what I wanted to say, really, which is what Doc are doing is one of the base sort of things that you expect from fintech. The way that I wrote it down was democratizing finance is a pillar of fintech, and that's exactly what Doc is doing. They are essentially creating an environment which are allowing people that historically have been unable to have a bank account. I mean, in the UK, I think it's very easy to sort of take that for granted and sort of forget how fortunate sort of we are in the sense that the UK is very developed and that we have, access to banks quite easily, whereas people across the world, and especially sort of in developing countries and in certain regions, especially like a favela, that sort of is a completely other world. They've never had these financial services that we've grown up with. And when you're seeing these firms like Doc, like G10, democratizing access to finance by creating these alternative means to really be sustainable themselves, for people to have a better quality of life because they have more access to money and better ways to save, better ways to, do these things with money. It almost sort of, it acts as a first stepping stone almost to get away from perhaps the negative side of things that you think about when you think about sort of developing or rural areas where perhaps, crime might be a bigger thing because there isn't any option for people to store money away, because if they do store money, there's going to be physical money and it will get stolen and so on and so forth. So I think when you think about these digital services, which are now opening themselves up to communities which previously haven't had access to finance, I really can't say enough good things about it. And like I said, I think it really is sort of a cornerstone of fintech, and it's just fintech doing what fintechs should do, and it's doing it right. So yeah, no, unfortunately, nothing too wild to add.
I think that's a good way to wrap it up for the three stories that, say it as a pillar of fintech. I think that's a pretty good way to sum things up and move on to our final section.
Yeah, awesome. What a great segue. But very quickly, before we move on to what I learned this week, if you liked anything you heard today, head on over to thefintechtimes.com where you can hear plenty more news and insights over there. But yeah, let's do what I learned this week. So each week we learn so much new information and new things with all the stuff that comes across our desks being at the Fintech Times. We thought it'd be fun to share that with our listeners. So Francis, what have you learned this week?
Yeah, cheers, Polly. So this week I found some findings from Capital One that uncovered the extent of US consumers' digital and financial literacy. And it found that about 55% of Americans are digitally financially literate, meaning they scored high in both digital literacy and financial literacy, which I thought was quite interesting.
Yeah, super interesting. Tom, what did you learn this week?
This week, via a new Acronis report, I learned that AI-enhanced phishing affected 91.1% of all organizations in 2023 and contributed to a surge of over 200% in email attacks in the same year, as opposed to the second half of 2022. And I think they were just very surprising numbers to me, showing the dangers of AI as well as the good it can do.
Awesome. And mine is actually kind of similar to yours in that a new survey has found that 51% of business leaders in the Middle East are concerned about a lack of funding as the primary hurdle to cybersecurity. I feel like we're hearing a lot about cybersecurity at the moment, so I thought that was kind of interesting. But anyway, thank you so much, guys, as always, for joining me on this podcast. I feel like, once again, not to toot our own horns, we knocked that one out of the park. That's like 3 in a row now that we've just nailed. But anyway, thank you guys so much for joining me, and I'll catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.